welcome to Informed Investing. My name is Don Lawrence. I'm the CEO of STA Research, and our platform is StockTargetAdvisor.com. I'm a financial analyst and a trader, and today we're going to talk about a trending stock, AMD, the chip maker. And just a few days ago, both AMD and Intel sort of signaled their concern about the demand destruction of computers. Demand is off quite significantly, and obviously that's weighing on the stock. Obviously, the demand for chips are going to fall as a sort of catalyst of that. So we're going to have a look at AMD stock here. It's good company, make good products, and of course sometimes that sort of doesn't matter. It's more about where the sort of a company like this falls in the sort of economic cycle, and obviously is sort of people are reeling from inflationary pressures. They cut back on stuff like computers. So we're gonna have a quick look and at the stock and see what we think is where we think the stock's going. Excuse me, what the range is and kind of what the analysts are saying and as such. So first of all, right off the cuff, we've got the average analyst rating coming in a strong buy. What's interesting, we've got the average crowd rating coming in as a hold. So obviously the larger sort of retail crowd, small investor is a bit more cautious on the stock, and we do have the average analyst target coming in at 118, while we've got the average user in target at 115. So they're close together there. If we look at the charts, I think that's sort of the big sign, the big sort of telltale sign of what's going on with the stock. Obviously, sort of pre-COVID, the stock was around anywhere from the sort of 20s and into 30 there, and all of a sudden it got this massive jump up to around the 150 range, I believe, in there. So it had a sort of massive jump there. If we look back over the long term, over about 30 years or so, we will see that AMD goes through these massive sort of Mount Everest sort of peaks like this, and basically that's kind of what the stock's experiencing right now is coming off one of those Everest peaks. So today just broke through the support level of $75, so I think it closed around 69. So the stock has further to fall. So if you look at sort of the long range, it's quite possible that stock could fall down to sort of the low 30s. That's sort of the bottom range of where the stock could go. Of course, it's still over half of where it's trading at close today. So obviously it would concern a lot of investors with regards to that. But the truth of the matter is those charts don't lie, and you can see over the course of the history on that stock, how much that stock goes up. It goes up 5-8 times, and then it sort of retraces almost all its gains, as I say, in sort of that sort of pie shape, Mount Forest kind of up and down drop there. So it's very important, regardless of the company, the fundamentals and all the rest of it. Sometimes you've got to look at those charts, and the charts take priority over a lot of other stuff. And I would say right now is that those charts, the technical aspect is definitely saying caution there. So it looks like on the chart that the next low is at $52. If it breaks 52, it's going to 42, and if it breaks that, as we just discussed a minute ago, I think around that 30, 31, 32 could be that very bottom low that it hits. And anyways, obviously, let's hope it doesn't go that low, but that's we're just reading the charts. That's what the charts are saying. So if we look at the fundamental analysis of the stock, we can see that the stock has high capitalization, which we like. It has superior risk adjusted returns. It has superior capital utilization. It has low debt. It has positive cash flow. It has positive free cash flow. It has superior earnings growth. It has superior revenue growth, and this is all in comparison to peers, and high gross profit to asset ratio. What we don't like about the stock is the high volatility, and we just discussed that. Massive ups, massive downs. It's overpriced compared to earnings, overpriced to cash flow basis, poor return on equity, poor return on assets, and overpriced on free cash flow basis. So obviously the positive attributes of the fundamentals overweigh the negative ones, but you know, like I say, it's really the chart we're looking at here. Anyways, guys, I hope this sort of quick rundown sort of helps on the on looking at AMD and where it's going, and obviously the tone is caution there. You know, it looks like we got further downside there, unfortunately. Let me know what you guys think. Appreciate you checking in, guys. Remember, guys, your best trade is always a hedge. Cheers.